Hey, how's it going, guys? Mr. Freecorner here. I am coming to you today to show you an article that I found very interesting. Looks like it is explaining why today's market dump happened for the most part. Um, so let's go ahead and take a look at this. And this is on the CCN website. It says this AI tracked unusual market behavior before today's big crypto drop. Now, before I go ahead and get into this, let me go ahead and say I am not a financial analyst. I am not giving any type of advice or anything like that. Anything I may say here is just my opinion, so please take it with a grain of salt and do your own research, then base your decisions on the information you do get. So now that with that being said, let's go ahead and get into this article. Earlier today, news spread that Goldman Sachs was sidelining plans of opening its cryptocurrency trading desk, a report coinciding with a market that took a sharp downturn. The other day, market analysts saw someone take a 10,000 BTC short position while overall market sentiment has been positive. Top analysts have been questioning why someone would take a $74 million short position so quickly. It didn't make sense unless he knew something they didn't. Only a few days after he started shorting, there is some bearish news that comes out. Others speculate that it could have been someone at Goldman Sachs themselves who took a $74 million short position, waited 2 days, then announced they're pulling out of crypto. These speculations have been just that, speculation. But with new AI technology keeping a watchful eye on the cryptocurrency market, there is evidence that points to deliberate market manipulation, though by whom is still up for debate. And CCN just got the scoop directly from the data source. What happened? When the crypto drop occurred in the morning, for quite some time, traders were looking for news behind such unusual negative 10% move across the board. Bitcoin, Ether, Litecoin, and other tokens all declined on substantial volume. Later in the day, the catalyst was found. Goldman Sachs decided to pause development on its rumored crypto trading desk. Many comments around this news were regarding potential insider trading and the fact that institutional buyers would like to get into the crypto space at lower levels, thus manipulating the markets. Data scientists and market analysts from the Ronin AI team, an AI-based crypto signals platform, took a closer look into the situation to see any red flag activities surrounding the drop. A number of indicators were pointing to some unusual behavior right before the drop. One of them is the social sentiment that sporadically increased minutes before the actual drop took place. The 3-day chart below indicates that such volatility and social sentiment takes place often, and each time it happens, AI algorithms react to it. And as you can see, the chart here shows you exactly actually what I was speaking of today. Quite a nice drop today. And to go on, this chart doesn't indicate bullish or bearish, rather a sudden influx of activity that is not authentic. To zoom in, let's look into the last couple of hours preceding the event. It is very clear how social sentiment spiked above the 3 standard deviations from its mean levels. Historical data indicates these spikes are not typically naturally occurring events. 3 standard deviations event occur in about 0.3% of cases, and every time it happens, the Ronin AI team studies the event to analyze potential market effects. Okay, so yeah, zooming in here, and this is exactly what I was looking at earlier. We saw a huge drop off, and then another drop off, which left us, and this is for Bitcoin, but I mean it mirrors XRP as well, several, and other coins. Moving on, in the morning drop, the break above the 3 standard deviations took place about 10 to 15 minutes right before crypto declined to spur more questions as to whether such an event was in fact a market manipulation or not. The timing, in addition to the unnaturalness of such a spike, is strong indications. Data scientists strongly believe this was either market manipulation or insider trading, but are reluctant to give a definitive answer for obvious reasons. Regardless, the good news for the bulls is that whoever is shorting 10,000 BTC has to buy back at some point, and it'll likely push the price up significantly. The bad news is, when do they start closing the short positions and buying back? There's no real way to predict how this event will affect the market in the short and long term. So yeah, we say this all the time, that manipulation. I mean, a lot of us who are, making videos, we say this, but right here, even though they don't want to call a duck, look, it's a duck. It walks like it's got web feet, it quacks, does all that stuff. It's a duck. So, this shows us that something's going on, and the market is, the market's being manipulated. That's just, plain and simple. These large institutions are trying to get in. They want to get in at a low price. But I personally believe that they're waiting until the fourth quarter. For whatever reason, I believe that's the catalyst. Once this fourth quarter gets here, I think it's every man for himself. So, this is the best proof that I can provide, as far as backing up what I'm saying. But, look at it yourself. Tell me what you think. Make sure you like, subscribe, and hit the bell notification. Come back and see me. I'm going to try to put up, stay with all the news as best I can, put up more videos. Right now, actually, I'm on vacation, so I'm actually going to be putting up more videos, as you can see. So I definitely appreciate you guys tuning in. Like I said, come back and see me. And until then, have a great day, and God bless.